Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Well, good news for the economy last week in the form of the jobs report that was just released. Seemed to be good news for the stock market. Causes one to question whether or not investors are beginning to get comfortable with this whole taper concept. We're going to see what our panelists think. Equity strategist Brian Boland, ETF Research Director Nina Mishra, and ETF strategist Eric Dutram. It's the first time we've had two people from the ETF desk represented.
First time for everything, right?
That's right, absolutely. I'm a firm believer in that. So Nina, we're going to start with you. Okay. Good news for the economy would seem to be good news for the stock market if last Friday's market performance and how the market opened up this morning, December, what are we, 9th here, follow through from the rally after the jobs report. Investors, you think, are getting a little more comfortable with this whole taper thing, huh?
Yeah, exactly. Market has either been bipolar, that sometimes good news is good news and sometimes good news is bad news for the market, but it has been mostly good news is bad news for the stocks mode. But Friday was a good day. Investors are probably getting comfortable with the notion of tapering, and that tapering is not going to be bad for the stock market because tapering will come only when the economy is picking up. And growing economy is always good for the stocks. Another thing is that Fed has been trying its best to explain to the market and emphasize that tapering and tightening are different. So even if tapering starts, even if they start tapering, they are not going to raise interest rates anytime soon, the short-term interest rates. So probably market is finally getting the difference between tapering and tightening.
Investors getting comfortable even despite the fiscal uncertainty out there, huh?
Well, there were reports that the two parties are actually close to a deal, so that might have helped the market on Friday and this morning. So we'll see. We'll get to know in a day or two whether they actually arrive at a deal or not. Eric,
what do you think?
You know, I think that, the investors are kind of still betting that taper is going to come in March or, at least in 2014. I don't think anyone's really anticipating a taper coming now. And I think that's why stocks are kind of running up over on Friday and, going into today's session. I do agree that the fiscal issues aren't going to be that important this year. I think the Republicans and Democrats will find a way this time, if only because the Republicans are going to want the focus to be on the health care law and all the issues going there. So I think they're going to try and play this one, nice and easy, and then let the focus be on the healthcare stuff going into the elections. So, I think those factors are going to combine to produce some short-term gains. But, over, January and March, when we actually do see a taper, it could be a little more rocky for the market.
So investors not necessarily getting comfortable, you think? It's just that they don't think it's going to happen for
a while.
Right.
They still think it's going to be a couple months out. Personally, I think we could see a taper this month. I mean, they got to do it eventually, right? But it's still up in the air, I think.
So does Brian think that we could see a December taper? They got a meeting, one last meeting for the year, the Fed, next week.
Right. And, we have a meeting here every couple of weeks, every 2 weeks on a Wednesday where we all sit together and knock our heads together and see if we can't come up with an original idea. And everyone...
Wear that jacket at that meeting, John?
No, that meeting's not good enough. Oh. This is the only place that's good enough for the jacket.
I appreciate that.
But in that meeting, we all came to the conclusion, or everyone besides me, said that there's not going to be a taper. But then as I say, well, now if we all say that, then it's definitely going to be a taper. And, I think the idea really isn't that the taper is going to start this month, but I think that the schedule gets laid out at this meeting. So, what that means is there is going to be some announcement for taper, and it's likely to be like an April, May sort of beginning of the taper. So everyone will have plenty of time to plan into the idea of when the Fed is going to stop those open market purchases.
All right, I had to make a comment about the jacket, right? I had
I'm
to.
surprised it took so long.
Terry's jacket's green with envy.
Yeah, that's absolutely. I hate to beat a dead horse here, but still on the topic of taper, because it seems like that's all anybody's talking about anymore. Would taper, whenever it starts, give the bears any kind of a decent foothold in the stock market?
I don't think so. I think 2014 is still going to be a good year for stocks, though maybe not as good as 2013. S&P climbed like 29% this year, so this has been a stellar year for the stocks. But still, economy is growing and stocks are the place to be in when the economy grows. So I don't think it is going to give any benefit to the bears.
Eric, this seems to not agree, right?
Well, I think some sectors are going to be really hurt, especially if rates continue to go up. If the midterm, short-term rates continue to accelerate, we see the 10-year go over 3%. It could be really bad for the REIT space, mortgage REITs. These have already been pretty hit, and their Zacks industry ranks are already pretty low. So they could continue to tumble if rates continue to rise. For 2014, I think we'll see a solid year, but not a fantastic year like we saw this year. Maybe somewhere in the neighborhood of 8 to 10%, kind of going back to the norm after the great year 2013 and then the flat 2012.
Do you think that the bears could get a foothold with the taper news?
Yeah, I think there are those macro issues that are out there. Obviously cash on the sidelines, the worldwide performance not being so good. Looking elsewhere. So kind of a flight to safety here domestically in the U.S. But at the same time, I think it's kind of the notion that I think the very easy of the easy money has been made, and therefore it's kind of time to bring in some of those bets. Maybe the more aggressive type end bets are going to come off the table and come off the top, first. Mm-hmm. But I think over time, when you see those high flyers come in a little bit more, that's going to have an effect that's going to bring in even the people that are investing in dividends and those sorts of things that are more safety spots. They're even going to pull in the reins just a little bit.
All right. So what's an investor to do at this point? Hold tight.
Hold tight and ride through here. We're going to have a Santa Claus rally.
Okay, which is the reason for the jacket. I got it.
And we should also have a good January effect.
I think they should shift to growth sectors. I like industrials and technology for 2014. I agree with Eric that not all sectors will do well. Bonds and bond-like sectors, they are going to suffer, but growth sectors are going to do well.
What about the cyclical sectors? Eric, you seem to think that they're good, not good?
Well, I mean, they've seen such strong growth already this year. It's hard to say if they can continue this, amazing run into 2014. Right. But I'm looking at, kind of large cap growth, mid cap growth. I think some of the small caps, as Brian kind of alluded to earlier, have been a little played out already. So I'm going to look a little larger going into 2014.
All right, looking large, living large with that jacket.
Cashmere. Go ahead, touch it.
No, I don't even want to. Thank you all for that. Stock picks in the next segment. Click on over.